Last trading week finished on a positive note. The US stock market has resumed its rally, winning back the losses from last week, caused by renewed fears that the US debt ceiling will be exceeded. But the threat of the US government shutdown has become so common that its impact on the financial markets is rather insignificant and short-lived. Thus, the US dollar index, which measures its value against a basket of 6 other major currencies, finished the week near the level of 94 points, having advanced by 0.81% in 5 days. The quote still remains close to its highest level in more than a year. Market participants were buying up the US dollar in anticipation that the US Federal Reserve would cut stimulus measures in November and start raising rates next year. A sharp rise in government bond yields also added to the confidence of the US currency. At the same time, the euro dropped to its lowest level against the US dollar since July 2020. Investors keep in mind the stance of the European Central Bank, which intends to keep its monetary policy unchanged for some time. ECB President Christine Lagarde said at the ECB annual forum that there were no signs that this increases in inflation is becoming broad-based. She stressed the need to be patient and wait before tightening monetary policy. Meanwhile, US Federal Reserve Chairman Jerome Powell said last week that the Fed could begin cutting asset purchases in November and start raising interest rates as early as next year. And this is a clear bearish sign for the euro-dollar pair. Meanwhile, the British pound feels a bit more confident. The pound-dollar pair declined to the level of December of the last year amid rising US dollar. Investors take into account the hawkish stance of the Bank of England. Monetary Policy Committee Chairman Andrew Bailey said on Monday that interest rates could rise this year even before the current bond buying program expires, but only in case of inflationary pressures. The UK Central Bank raised its inflation forecast last week. Besides, 2 members of the Bank of England's Monetary Policy Committee have even called for an immediate halt of its £895 billion bond buying programme, thus raising expectations for a near-term interest rate hike. As for the crypto market, the price of Bitcoin has finally resumed the uptrend. Over the week, the number one cryptocurrency went up by 13%, although with a slight decline on Monday. The demand for Bitcoin increased after the US administration had announced it would consider regulating the issuers of cryptocurrencies. However, this would apply only to the so-called stablecoins. They can come under same regulation that is used for the banking industry. Earlier, Fed Chair Jerome Powell said that the US regulator was not planning to ban cryptocurrencies, as it recently happened in China. Powell also said that the US Central Bank should work together with Congress to create the digital dollar. Naturally, such rhetoric supported Bitcoin, which accelerated its growth to the level of $49,000 per token. In the commodities market, the oil bulls managed to push the quote of BRENT to a 3-year high. Oil's rally was facilitated by restricted supply and high demand ahead of the OPEC meeting. The cartel is going to meet today to discuss the possibility of increasing production by 400,000 barrels per day or more, starting November or December. The oil market also received support from a substitution effect on the back of rising natural gas prices. Last week, gold pulled back from a 1.5-month low. The price of the precious metal completed the weekly session near the level of $1,760 per troy ounce. You've watched combined review of commodity and currency markets on Insta TV with me, Anna Kasatkina. Stay tuned.